Hello, everybody. Welcome to the Anomaly Advanced course, Core Content Lesson 1. We're going to be covering phases of price. In this first section here, we're going to be covering if-then statements. So firstly, let's cover consolidation. So one thing we must know about every single phase of price, consolidation, tracement, reversal, is that they all start and end with expansion, right? So if the market expands, right, consolidates, then what can we expect? We will always expect continuation, right? Consolidation is a continuation signature, meaning that it cannot reverse from consolidation. Of course, the market can reverse consolidation, but we're not going to engage with that, right? If it consolidates, we're automatically assuming it's going to continue. But one thing we must understand is that it actually does not have to manipulate this low. We just demand it to manipulate this low, right? Because that is the only way we can ever expect it to expand, right? How are you going to expect price to expand within consolidation with no reversal signature, right? So ideally, we want to see that A and B, right? That expansion, that accumulation, manipulation of the consolidation low, that prints a reversal, and reversal is the trigger for expansion. So now let's go over the if-then statement for retracement. So like I said, every single phase of price starts with expansion. So as you can see, price expands, it retraces. What will happen next? It will expand. Now let's go over the if-then statement for reversal. If price trades into a relevant level, prints a reversal signature, what should follow? Expansion. Now let's cover phases of price and their signatures. Starting off with expansion, we're going to be highlighting highs and lows. How does price react to highs and lows within an expansion? So firstly, after price puts in a reversal and gives us that V shape away, that reversal signature, it should be displacing through highs and rejecting lows. Now we're going to be talking about order flow within an expansion. What should we see happen? Respecting opposing candles and fair value gaps. Another thing to talk about is the retracement size within an expansion. After price puts in a reversal on its way to a draw liquidity, we should not be seeing deep retracements. Ideally, you don't even want to see price hit EQ, especially deep discount within a bullish expansion. So if you ever see a deep retracement, that is a red flag. So looking here with higher time frame expansion candles, that is exactly where this small wick logic comes from, as this small wick is just a lower time frame retracement, right? Respecting equilibrium of the previous candle's range. We don't want to see those deep retracements into EQ of the previous candle's range. Now let's go ahead and talk about consolidation signatures. So what will we be seeing within a consolidation is after price expands, price will stay range bound in between a low and a high, creating failure swings on both sides. We will not engage with this price action until one of the sides of the range is met. Another way consolidation will look is what we call seek and destroy, or a broadening formation. Pretty sure you've heard this term. So if price expands, consolidates, and manipulates the high first, if you're actually bullish, maybe there's a draw on liquidity up here, not yet taken. So you're not really expecting a bearish move lower. This manipulation can just be used to go lower to manipulate the range low. And if price fails to displace through this low, that is what we call a seek and destroy market. And it is a type of consolidation. You can actually trade this back into the high to get back on side with order flow. Because remember, price is not reverse consolidation. Now let's go ahead and talk about retracement signatures. This is when we expand, we start to come back into the range, but with the way price prints, that's very telling. What you're going to see is very close proximity highs, right? Very deep pullbacks back into the retracement point high, very lackluster in its movement. And typically you'll see price retracing after we hit objectives, and it will trace into gaps. So another way price will look within a retracement is if price expands, then consolidates, and then trades into the low of that consolidation, but fails to manipulate it. This is typically a higher time for consolidation. There will be a higher time for fair value gap in the range that it wants to go to, instead of manipulating this consolidation low to then go higher, because we know that price cannot reverse consolidation. So typically, this is another way you will see retracements form. So now let's go ahead and talk about reversal signatures. This is simply when price expands into a key level, expands away, giving us that V-shaped signature. This is what you will look for on all time frames to confirm your high probability reversal. Now let's talk about the confirmation to a reversal. It is simply the expansion into the key level. That expansion into the key level creates an opposing candle or an order block. When price expands away from the key level, that creates a CSD when we close above the opening price here, and that change of state delivery is your confirmation. So another reversal signature that we will always be using is SMT divergence, pairing that with our key level that we want to see price reverse off of. Now let's go ahead and talk about higher time frame signatures. So here we have consolidation. This is where price expands. The next candle fails to take out the previous candle's high and the previous candle's low. This inside bar is a lower time frame consolidation. Now let's go ahead and talk about higher time frame retracements. This is where price expands and leaves these close proximity highs, right? This previous high was not taken, this previous high was not taken, and this high here is very close proximity to the previous high. Well, they all are. That's what's creating that low resistance liquidity, or those failure swings, those deep pullbacks into the point of retracement. And this is typically that continuation signature that we want to see, right? Price trade to this gap and expand again, right? Expansion, retracement, expansion, because consolidations and retracements are both continuation signatures. Now let's go ahead and talk about expansion signatures. This is simply, right, having that small wick within respect of the previous candle's closure. So as you can see here, we have that reversal candle, right? When a reversal candle closes near its own high, you mark out the whole entire range. You almost treat it like an expansion candle, right? So we want to see this candle 3 have that small wick. That is that expansion signature, right? We want price to expand away from the reversal. And as you see, it expands away. Once it closes an expansion candle, we essentially do the same thing, right? Mark out the whole entire range. This is where we want to see that continuation towards our drawn liquidity in respect of that previous candle's range, forming that small wick. Now let's go ahead and talk about higher time frame reversal signatures. That is simply a C2 or reversal candle after hitting a key level. Now let's go ahead and put it all together using the higher time frame and the lower time frame to confirm it. Firstly, let's cover reversal. So here, as you can see, we have our higher time frame key level, which is a fair value gap. This candle hits that fair value gap, so we are within a higher time frame C2 candle or reversal candle. And the way to confirm this reversal candle is when we drop down to lower time frame. This would be the lower time frame view within this higher time frame candle. We want to see those V-shaped signatures, that reversal signature after hitting that key level, right? So this high right here would be the previous day's high or the fair value gap low. And as you can see, when price trades into it, it's creating these swing points, right? And those swing points are confirming the high of this reversal candle, right? They're creating that V-shaped signature, right? So look over here. What do we see? Expansion to the high, expansion away, change of state delivery, right? Candle 1, candle 2, candle 3, creating that expansion away. So even on the lower time frame, you're going to want to see the same thing, right? To confirm this C2 candle, you want to see the same thing on the lower time frame, right? So let's say this is the daily chart. This is the hourly chart. On the lower time frame to confirm this C2, maybe the 5-minute V shape, right? Now let's go over consolidation. So once price reverses, we are now in the expansion phase. So what do we want to see in expansion? On our way to the drawn liquidity is consolidations and retracements, because they are what? Continuation signatures, right? So as you can see here, within that previous candle, right, we hit that previous day's low, which is right here. We want to see this fail to be manipulated, right? Because this is our overall draw, right? What is this universal model? Internal to external, right? This is the actual drawn liquidity that's important, right? Anything internal to the reversal out of the key level in this higher time frame drawn liquidity is essentially irrelevant. We really want to see this internal objective, right? When engaged, print continuous signature, right? So when can we expect expansion? After your reversal, when can we expect a new phase of price? When price expands into objectives, right? So this internal objective on maybe, let's say, the hourly time frame is when you're going to get an hourly new phase of price, right? So here we can see that price consolidates, which is a failure to manipulate, and a continuation signature. So that means that price should not reverse from this low, and it should continue through it to this low, and the low that was put in here, right? So here we have consolidation. How do we want to trigger consolidation? We want to wait for a manipulation of that, and then you do the same thing, right? Once we engage with this high, which is a key level, then you want to see that reverse signature, that C2 candle, and that expansion towards your draw liquidity. So now let's go over retracements, how to put it all together, right? Once we reverse, here's that C2 candle. We engage with that low, expansion into something relevant. Here is an hourly relevant low, but again, not necessarily relevant to the bigger picture. But you take an hour low, you can get an hourly new phase of price. We want to see those continuation signatures, right? We do not want to see price reverse at this low, right? Because that would be a failure to reverse from the overall higher time frame key level. So as you can see, price engaged with this low. Do we get a reverse signature? No, right? What are we doing? Very lackluster price action, creating those really close lows, creating those failure swings at the point of retracements. And how do we typically cap off retracements? From a fair value gap. So once we get to this fair value gap, we're expecting price to go from expansion, retracement, expansion. So you confirm this key level with a reversal, and that's when you get the expansion. So now let's talk about expansion. When can you expect it? Well, once you have that key level in the higher time frame, that higher time reversal candle, you're expecting the next day to expand, right? But even within these candles here, to form the high of these candles, you're going to have lower time frame expansions, right, that make up these candles. So as you can see here, what makes up this reversal candle here is when price trades into the previous high or the fair value gap below, right? Once price reverses there, that's when price expands a lower time frame, right? Which is what is causing this candle to become a reversal candle, right? And then it closes off, we retrace. So we already know this is good, right? This phase of price is supporting the idea for a C3 expansion because it's retracement, which is a continuous signature. We want this next day to continue because C2 reversed from a key level and we have a draw on liquidity, right? So once price trades into a key level and prints that reversal candle, now we expect this high to be put in, right? And that's when we expect the expansion to actually follow, right? It's after hitting a key level, putting in that C2 candle, that reverse signature, and we want to see those clear-cut phases of price to support our idea. So here we are on gold on the weekly time frame. Like I said, this is a fractal concept. So we're going to be looking at the weekly as our universal model, right? Price trades into a high on the correlated asset, creates SMT. Like I said, we like to pair SMT with our key levels. What does price do? Print a C2 reversal candle on that weekly time frame. And then we want to see price expand, right? Those higher time frame expansion signatures, right? What do we see? Small wick, small wick, small wick, small wick, all the way towards our drawn liquidity rate. This is order pairing ranges or manipulation ranges, whatever you want to call it. But when we look within these higher time frame expansion candles, that's when we're going to see those lower time frame signatures that essentially confirm these expansion candles and what make up these expansion candles on the higher time frame. So we're going to be using that weekly and daily alignment. So let's go ahead and see the daily time frame. So here we are on the daily time frame, and as you can see, when price creates this crack in correlation here with that weekly time frame, before that weekly candle even closes, what is forming the high of that weekly candle is a daily C2 reversal signature, right? Price expands away into a relevant low. But remember, this is an internal relevant low, right? We have the reversal and the draw liquidity. So anything internal to this range here, anything internal to it, anything you see to the left is essentially irrelevant, right? Anything that is engineered to the right side is irrelevant, right? We want to see price trade into those levels and then print continuation signatures, right? Or failure to manipulate to continue all the way to our draw liquidity. Those are things we want to see, right? So what does price do? Price gives us that V shape, right? That expansion away from our key level after price creates that SMT. Price trades into that relevant level. This is where we want to see consolidations and retracements. What does price do? Consolidates, clear consolidation, right? What is the way we want to trade consolidation? Wait for the high to be traded into or manipulated. In this case, the high is a fair value gap, so that is good as well. But what do we notice here? Price prints a C2 candle, and C3 does not really expand away. So this is something we are not even going to engage with. We're going to simply wait until price expands away. Once price expands away, showing the willingness to trade away from this, that's when we can start to look for continuation. As you can see, price continues, trades into this low. If we zoom in here, when we hit this low here, what does price do? Right, very, very small range candle. So once we print that small range candle, we view that on the lower time frame. What do we see? Clear consolidation, right? Very, very clear consolidation. So what does that mean? Price should do what? It should continue through this low, right? This is what we want to see. We want to see price fail to manipulate this low so we can expand through it to continue through that low towards our overall drawn liquidity way down here, right? We see over here, price expands away. This is really what we want to see as well. You take this low, and if price really trades through low, it is highly likely we're going to create a new low, right? Once price starts to retrace, right? So price trades way through this low. Once we create this new low, right? Candle 1, candle 2, candle 3, right? We're probably going to take out this low again, right? Because this key level here was not manipulated. So deep manipulations through lows are good to see for continuation, right? In a bearish range. So that's what we see here. What are we creating, guys? Shallow retracements. And this is the higher time frame, right? Very, very shallow traces, not even reaching EQ. We don't need to reach EQ. If we take, however you measure it, man, how do you measure it from here to here, right? Are we seeing a really deep retracement? Nope. What about right here? Nope, right? No deep retracements. This is what we want to see. This is strong expansion signatures, right? So we see here a gap. This is a consolidation. So price expands. We have an inside bar. That is a higher time frame consolidation signature. What do we want to see? The manipulation of that consolidation. We have that reversal into expansion candle away from it, right? Let's move on. Price expands again and falls short of the overall drawn liquidity. This is another great, great thing to see when trading retracement, right? Let me just draw this up for you. So if price comes off of a reversal like this, for example, at a key level, maybe this is your drawn liquidity. If price expands away like this, right? And remember, what are we doing here? Displacing through highs, deep runs through highs, which is what I just talked about with this low right here. These are good things to see, right? But it's even better if we start to retrace and we fall short of the overall objective. Because what are we doing right now? We're engineering close proximity highs or failure swings, right? Which is a retracing signature. So because we haven't reached an overall drawn liquidity, because we're entering these highs, this range right here becomes a very, very high probable range for a expansion, retracement expansion, right? So we're gonna look back within this range for a gap in price, and that's gonna be a really high probable gap, right? So that's exactly what you see right here. Look at these close proximity lows. When price engineers this first swing point, we want to start to see retracement signatures, and that's what you see here, dude. Look at these close proximity lows. Very lackluster in price action. Look at these big candles, these big bearish candles, and these really small candles following that, right? That there is a consolidation slash retracement signature, right? What do we see here? A key level, a fair value gap. This is about where you want to see that retracement capped off, right? When we think about daily profiles, what is this day doing? Let's see. It is opening high first, right? Into a key level. Okay, so when we hit this key level, what do we want to see, guys? We want to see expansion signatures, reversal signatures. So let's go to the lower time frame here on the hourly chart. What do we see? Price trades into this high, right? Prints a C2 candle on the hourly time frame. So what is this going to be, right? This is going to be the high of day potentially, right? Because it's printing that reversal signature, right? And then we expand away. Look at that V-shaped signature. We do not manipulate this low here, as you can see. Do not manipulate it. We're making that deep run through it, right? No real reversal candles through it. And then we retrace, not creating that deep retracement. We don't want to see that. Into a gap. Same thing, right? Prints that pretty much a C2 candle, long wick, expands away, expanding through lows, really deep retracements. And then what are we doing here, guys? Same thing. Look, we're creating that really deep expansion back to lows. And what are we doing? Retracing. And like I said, that gap is going to be high probable for continuation, right? And once we trade this low, we don't care about this low because it is not a relevant level, right? This is the relevant level on a higher time frame, right? So when we engage with these levels here, right? What do we want to see? Again, continuation signatures, which is consolidations and retracements. So what did you hear? Consolidates. The consolidation high is a fair value gap low on the hourly time frame. We manipulate it, which is what we want to see, right? We want to see expansion, consolidation, manipulation, expansion. That's how we actually trade it. Price doesn't technically have to do this. It can just expand, consolidate, and expand, but we're not going to trade that. But as you can see, the day, again, how does this daily candle form? It opens high first, right? We went over this in candle profiles, right? Price opens high first, trades into our key level, prints a reversal signature, C2 candle, C3, C4 expansion. So as you can see how we're putting this all together, right? We're having phase of price support our narrative. We're having candle profile support our narrative. And this is how you build high probability conviction to framework. So zooming back out one more time, what do we see? Higher time frame expansion candles and lower time frame continuation signatures that support the idea for those candles to become expansion candles. You can see over here, we have daily expansion candles. We drop down to lower time frame. What do we see? 4-hour and 1-hour continuation signatures, right? Retracements, consolidations. Once we hit key levels, they reverse, forming the high of these higher time frame expansion candles, which we look to get on side with.